Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, October 3rd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here that the ES sold off tremendously in the previous session. This is something we talked about before, with the fact that price had taken an outside day, a bearish outside day down on a failed new high, sold off. The indication was that we would likely push lower if price could not hold the 2940 level. That would open up a return back down toward 2880 and perhaps as low as 2820 to 2800. We got to 2880, reaching as low as 2874 in the previous day. That's important right there, as price has already returned back to the midpoint of the key range that we've been using here. So you have this key range high right there. We talked about price holding above it and failing. You get to the midpoint and to the low, and that's what it did here and here. We got above it again. We failed on the first trading day of the month, and then by the second trading day of the month we had already reached the midpoint with a shot to see the lower zone right here at around 2800. So again, we could be looking at more weakness to the downside, but one thing is clear: every time price has pulled back to the 200 or just below it, bulls have come back into the picture. So last time, back in May, June here, price pushed to and below the 200-day average and then rallied. Same thing happened here, a rally, here, a rally, and then lastly here, which was back in August. So we just barely dipped the toe below that 200-day. Are we going to see one good move below it, maybe get as low as 2840 and fail? Because then that could lead to a nice move back toward recent highs. So 2840 is going to be very important here. But again, whenever you fail to hold up at this high, you tend to go across the range, and that still leaves 2800 as a potential target here. So we'll see how much more pullback we get before we perhaps see some sort of buying opportunity. Remember, while we do oftentimes see an October pullback, that pullback can oftentimes be a buying opportunity for an end-of-year move. So we'll see how this plays out. All right, let's take a look now at the NQ. One thing to keep in mind with both the ES and the NQ right now is the fact that the previous session was a high range day in both accounts. That tends to lead to low range days in the next session. And so while we had this tremendous high range day yesterday, today we're only trading 30% of ADR in the NQ, 40% in the ES. Again, that means that this range is very tiny compared to average range so far over the last 10 sessions. Yesterday's range was over 200% of average, and we had a nice continuation almost back to 7,500, which is the 200-day average. Now coming back into that zone again, you can see that bulls have defended in that zone each and every time or just below it. We'll see if that happens again. But again, failing to hold that 7,800 oftentimes has led to a move back toward 7,400. So not only do we hit 7,500 perhaps pretty soon, maybe today, but 7,400 could be just around the corner. That is recent support lows right here. And again, after failing to hold above the top of this box here, you usually go down to the bottom of that level. So 7,400 could still be ahead on the very near-term basis. So while compression is being seen, any pullback could still be a selling opportunity on a swing basis for a continuation towards 7,400. Again, we'll want to see how price responds down here below the 200-day average. All right, let's take a look now at crude oil. Okay, here with crude oil, let's pop this thing up. It's taking its time. We've had quite a sell-off here, and it reminds me of last fall when we sold off. It's very similar in that we've had lots of stop run days. You know, we had this big gap up with a tail and then a stop run day that followed. Then 4 days of trying to hold and then a stop run day. And then 3 days of trying to hold and a stop run day. Yesterday tried to hold on Monday, and yesterday stop run down, and now we're below the previous month's low already with a very aggressive drop that took us basically from 63 to 52, 11 handles in just a few weeks. That's very similar to the price action we saw last time around when we had a big rejection here and stop run after stop run after stop run every time price tried to find some sort of buyers. You had a major stop run. Very similar price action. We're also in the seasonality now where selling pressure is likely to occur all the way into the end of the year. And so again, if we see any type of bounce, that could be grounds for selling opportunity down toward 50 half and perhaps down below into the 40s. So right now, very, very bearish, holding below the previous month's low at the moment within a very narrow range, 36% of average. Again, after high range day, you tend to see compression. Any bounce could still be a selling opportunity, but this thing has not even been able to bounce above prior highs. They've mostly been bounces from lows. So this is very bearish with more downside price action likely ahead. Remember, failing to hold below above 53 opened up 50 half. So if price is able to reestablish back above 53, that would open up a near-term bounce opportunity here. All right, lastly, we'll take a look at gold futures. Right now, gold futures trading 1506.60, trading right at intraday VWAP. It's been mostly a flat D-shaped profile today, flat trading range day today, D-shaped profile. In the intraday, it's trading right around flat VWAP. And again, today's 40% of average. So you have ES at 40%, gold at 40%. You have crude oil at 36% and the NQ at 31% of average. This all comes after high range days in the previous session. More range-bound action likely to be seen throughout much of the day for the most part. But one thing to keep in mind here for gold is that it was able to withstand a big test into the LVN down here. Remember, I mentioned anything between 1460 and 1490. That was the LVN. It got below 1470 into 1465 and turned around pretty sharply. That was very good. The other thing that happened, it was a rejection of the previous month's low right here. Very strong reaction, and we're up. Now, this market has had kind of this higher, lower highs and lower lows type of thing after failing to get through these highs here, lower high here, and now we're pulling back. Do we see another lower high develop? Above 1520 would open up more upside. Failure to hold, get above 1520 could lead to another rotation back down. So right now, short-term strength is to the upside. As long as price remains above 1490, more near-term strength likely to be seen toward the upper end of the range, at least 1540 and then 1565. Those could be the next upside targets very easily. But again, 1490 is the key level to watch because a failure to hold that would open up another round of weakness. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.